Starting in May, some people with higher credit scores may actually end up paying a higher fee on their mortgage, while those with lower scores pay less. That doesn't sound right.
It doesn't. These changes are part of the federal government's effort to make home ownership available to more Americans. And this applies to all loans guaranteed by Fannie Mae or Freddie Mac, regardless of the lender.
Well, here to help us understand this and break down the changes and what it means for you is Frank Hempel, a mortgage advisor with Action Mortgage of Michigan.
Frank, can you start explaining just what exactly this means to people potentially at home right now?
Yeah, so the LLPAs, or loan level pricing adjustments, is what they're called in the mortgage industry. They're getting adjusted. And what it is if you are between a 680 credit score and those with a 780 credit score are going to be impacted the most. So every mortgage rate has a base price. Then when you start adding in all the factors of your credit scores, your loan to value, what the property is used for, is primary residence, investment, you get adjustments to go along with it. So what is happening is those with these credit scores, or a little bit higher, they're going to start getting less credit for their interest rate than what they once did. And those that have lower credit scores are going to get eased off a little bit. So it's going to be more, and it's enhancing them to be able to buy a home and get a little bit better rate. So to say that someone with a better credit score is going to get a worse rate or anything like that, that's not the case. If you have good credit, you're still going to have a better interest rate than someone with worse credit.
It's confusing though, because the way that it's worded, I took it to be that the better you are with your credit score, then you kind of have to pay for that.
Yes, so in the adjustments, so it used to be your adjustments were a little bit better. Now they're going to be a little bit worse. So yes, your rate might be maybe an 1/8% worse or 1/4% worse than what it was, but it's still going to be better than someone with, say, if you have a 760 credit score than someone with, say, like a 680 credit score.
Who does this affect? Does it affect people like us that already have a home, or is it only new buyers?
It's only going to be towards new buyers.
What about refinancing?
On refinances, yes, it will. The LLPAs will be different when you go to refinance a home, but you have to also take into effect that these LLPAs have already been in effect for the last couple of months. So yes, May 1st is when it technically goes into change, but it's loans that are delivered to Fannie Mae or Freddie Mac on May 1st or after. So if you were purchasing a home in March or April, you've already likely seen these changes within your rate.
What would it be for someone like me? I have not purchased a home and my credit is good. So what is the difference if I were to purchase home in a month versus 6 months ago?
I mean, I would say anywhere from 1/4% to maybe a 0.5% in rate. So it's nothing too crazy to where I would say, hey, you're getting taken advantage of. Is it something that I agree with? No, because obviously if you have good credit, you should be rewarded for that, I feel like. But it's not in the sense of, hey, go tank your credit score because you're going to get a better mortgage rate. You're still going to get a better rate if you have good credit.
How much does this help or hurt the middle class versus low income households here that are trying to buy a home?
So it should help them in regards to the adjustments that they're going to get on their mortgage interest rates. So the rates should be a little bit better, but we also have to take into effect that if you have a lower credit score, you still have to qualify for the mortgage. So we run automated underwriting systems that you have to pass before we actually even go into, in front of an actual underwriter. So if you have a lower credit score, you might want to look into like an FHA loan, that's subsidized by the government, just because it's a little bit easier for those lower credit scores.
Is right now a good time to buy a home?
Oh yeah, absolutely. So not just saying that because I'm in the industry, I always have believed that building wealth through real estate is one of the best things that you can do. And if you look at the trends over time, that what homes obviously were worth, 5-10 years ago to what they're worth now, you're doing 10x on what your homes were worth. So it's a great time to buy.
Well, I'm sorry, Jeff, go ahead.
So we were coming out of a red hot market
Yep.
just about a year ago, and rates are now really high. I mean, they've come back down a little bit, but they're still really high.
Yep. So they've come back down a little bit, still really high, but people are always going to have to buy houses. People are always going to be building families or job changes or things like that. And if, I'm sure you've heard it a million times over, if you're renting, you're always going to pay 100% interest rate. If you're purchasing a home, it's really worth it. So, and a lot of times, the rent versus buy, your payment is going to be much less by purchasing a home as opposed to renting. So. I would say it's definitely worth it.
All right, Frank, thanks so much for joining us.
No, absolutely. Thank you.